Hello, everybody. Welcome to my new weekly review of last week. So let's start on USDJPY. I had the end week of a minus 1%. So in total, I had minus 1%. So it is okay for that week, but it could become more. So USDJPY, 17 November. Um, we had here a 3 out of 4 on the weekly on 19 o'clock in the night. So we start on the daily. What can we see on the daily? On the daily, we had here a typical, if I take my drew line, typical bullish M. We had our first leg, second leg, third leg. Within that, we had the same highs. We expected the same lows, which it didn't hold. So this was a minus 1% trade. Because if I go now to the weekly chart here, this was the weekly. What can you see on the weekly chart? We had here our bigger bullish M of the weekly. You had your first leg, second leg, then here your third leg, then the fourth leg going back till that supply and demand zone, till that resistance here, resistance that which can become support here, and then here potential support. So this was the supply and demand zone that potentially could hold the price up till the daily TP, but it didn't do that, so it was a minus 1%. And the FIB was from this low to this high back then. This candle close wasn't yet here fully to the downside. And then it would tap the FIB, and then you had the 4 out of 4. So it was a 3 out of 4. Then I will go to the 4 hour because the daily was clear here. The 4 hour was a nice deceleration. So we had an impulsive move. We touched our daily zone of interest. And then we had the first candle, second candle, third candle. I could take my limit on that fourth candle when the candle opened. So then it went around 0.6%, but not the 1% for me. And then, yeah, it went to the downside. And this was a loss then. So this was a loss followed by the plan. Then GBPJPY, for me it was a good trade, 2.8%. Good trade with 4 out of 4 criteria around 15 o'clock. And I also watched team training, and I had here the notes about that Jorgen said that it was a 2 out of 4 because the weekly didn't yet fully broke above the weekly highs wicks, and the FIB completion, the round number to the downside was also hit. So if I go over the weekly, you can see my FIB completion wasn't hit yet back then because I took yeah, it was 30 pips to the downside for that round number or something like that. But yeah, if you took the round number 1004 1880, then it was around here and then it was tapped. So yeah, for me it was okay, you can count it with you or not. And then here this wicks also didn't broke, so for him it wasn't a buying zone. For me, it was because we had here resistance and it had here a small support wick closing above. So for me, it was a buying zone, but I can understand it why he said that. And also the FIB completion. So it was still 2 out of 4, actually. So yeah, it would still be a 2 out of 4. No, I think if it don't count the candle close because this candle close is pulling back, yeah, then it would be a 1 of 4. But for me it was a clear trade, so yeah. So then I went till the daily chart. What can we see on the daily chart with a clear bullish M? First leg, second leg, third leg, fourth leg. For me, it was a normal bullish M, not a big one. So I could take the diesel. And what I did then on the 4 hour was I took the diesel there. You had here your first candle. Oh, sorry. You had here your first candle, second candle, third candle. You could take your limit because we opened that fourth candle. We could take it on a diesel box. And then we could take it to the upside, and I took it around 2.8 out, normally about 2.5. But yeah, I want to take it a little bit higher out because of that loss and the potential losses that could come. So 2.8, I went out. Um, then Euro GBP. The next one was a minus 1.6%. So this was a trade that took me more out because of the spreads and impulsive movement. That's why it is a minus 1.6% out. So this was also a good trade, 4 out of 4 around the morning, 7 o'clock. So yeah, I will go over it. So on the weekly, what can we see? On the weekly, we have a 4 out of 4. We have our bullish trend, we have our bullish M that was formed. We touched that supply and demand zone here. This clear support, 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 resistance, 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 support, support. So for me, it was already 2 out of 4. We had our weekly candle with us, 3 out of 4, and the fib from this low till this high was tapped here, the fib level. So it's 4 out of 4. So then I can go to the daily chart. What can I see on daily chart? You had here your bigger bullish M. You had here your first leg, second leg, then here your third leg, fourth leg going back. You had then here your shoulder 1, potential head, shoulder 2, which was formed here. Here was it again also valid. So, and then you had here your bullish M here, fake out. So you had 3 patterns, so that was very nice. You had here your big supply and demand zone acting as resistance, resistance, support, support, support. So it was very nice zone to take along on. And then on the 4 hour, what could we see? It was here that shoulder 1 and shoulder 2. If you look on the 2 hour, then this close would be here and this close would be lower. So this is a clear inverse and a shoulder. The only thing you need to look at is if we make here the double top, which we made here, just double top, that I need to see in the backtesting files, but it's more likely that it will not play out. So here is the indication that we made double top, so the price don't want to go up, or it wants to make that shoulder 1, head shoulder 2, or this is an indication that we can go more to the downside. So this is the thing you can backtest with your inverted and shoulders or bullish M's if you made a double top before touching the trade, if it plays out or not. So this is a thing we can backtest. I also need to do that, so I will need to review the screenshots. So this was a minus 1.6% trade because of the spreads and the impulsive movement. It was like that. So then EURCAD, the last one, was also minus 1.1% a loss. So for me, it was a 2 out of 4 criteria around 11 o'clock midday, because what I said here with notes was because of the 2 of 4, we could potential wait for a fake out or better buying zone. Why I said this, if I go to the daily, on the daily you have here your clear bullish M, your first leg, second leg, third leg, fourth leg. So for me it's a normal bullish M. You had here your clear IC, but on this high of the IC body, you can see back in the history there was not yet some clear buying zone. And if we went to the daily lows, here is daily lows of the IC, then I had here some clear buying zone and a weekly buying zone sitting. So for me, it was maybe better to wait till these daily lows and then want to see a pattern because we had a 2 out of 4, so we want to increase our chances in the market to go to the upside. So this is a thing I could do, but I was just, okay, 2 out of 4, it's followed by the plan. Daily IC was touched. We could take a pattern or diesel. And yeah, on the 4 hour, you could see it was a bullish M at your first leg, second leg, third leg. Here again, a double top, like in a Euro GBP, and then we went to the downside, and it was a minus 1% loss. So actually, these double tops before you enter a trade, bullish M, inversion and shoulders, whatever kind of pattern except deceleration, you can see these double tops, and then we can go more to the downside, and it took us out. So this can be a thing we can backtest and see in our previous screenshots what we can do about that. Um, so yeah, potential, I said here, okay, potential for me, it was here, trade I could not take because it's a 2 out of 4. We could take a fake out or a pattern on the daily lows because there was a buying zone. So for me, it was a minus 1% week. Um, and it could be a potential week of plus um, 1.95% if I took my previous 4-hour take profit partials around one third. How I need to say around the 4-hour TP, one third out, and then the daily TP, the rest of it out. So these are the things I still do, but I do just normally 2.5%. I will take it out, I will take it out. So just 2.5%, I will fully close. So if I go to the missed trades, there are a lot of them, and one is there to discuss your NZD. This is more discussable trade. So because if I go and open the screenshots, um, if I go to the daily, what can you see on the daily? On the daily, you can see we are still bullish. We have this bullish M. So the FIP levels were tapped around here, this region 61.80, 78.60 here, around that region. So I took my new FIP from this low here till this high, because you had your potential shoulder 1, head shoulder 2, pattern within a pattern, within that bullish M, so you could take your limit. But what I saw also was, you had here a triple top, top 1, top 2, top 3. So these were all the same highs. So for me, this was already an indication on that weekly selling zone that we wanted to go more to the downside. Because it didn't work 3 times to break that level. On that weekly selling zone, supply and demand zone, as you can see, this was a weekly supply and demand zone, the blue zone. So for me, that's why I didn't take it. You could take this trade, your shoulder 1, head shoulder 2 within that bullish M. So this was a pattern within a pattern. And if you look on that weekly, you can see on the weekly we had a 3 out of 4, and you can see more clear this selling zone. This selling zone, this was just a false break of it. This candle that just closed above that, this was just a false break of it to make that potential natural M, same highs, potential same lows, or going more to the downside till these weekly lows. This is potentially a trade that can go to there. And you can see already at the end of the week, we had a weekly impulsive red candle to the downside. So probably next week it will be also one. So these weekly lows here, buying zone, actually here, the supply demand zone. So this is potentially a thing that we can see. So this was a 3 out of 4. The trend was still bullish. Candle close here was still bullish. The FIP levels from this low till this high were tapped here. Yeah, the supply demand was just against us. This support, resistance, resistance, resistance. So that's why the trade also didn't play out and why I didn't took it. Because if you look here on the 4-hour, you could take here your FIP from this high to this low. We had here a minus 27 FIP completion here. So that was very nice. You could take your trade on a daily high zone of interest, on just a daily zone of interest high. And yeah, you could potentially take your trade out on a break even here. And then the selling zone was tapped. See how nicely that selling zone was tapped here with a descending trend line here of that bearish W, and we went to the downside. So this was a potential trade you could take, but because of that weekly triple top, daily triple top, that I didn't took it. And I also didn't saw this pattern occurring with the triple top. That's clear. I saw I didn't saw that pattern, so that pattern within a pattern clearly after watching it. Then I saw okay, it was a pattern within a pattern, but the triple top was the only thing I saw back then that could play against us. So then EURGBP, what I can see, so I will open the trades because daily then the weekly, and then the 4-hour. So this was the daily. So what can we see on your GBP? This could be a very nice trade. We had your bullish M here, tapping the daily lows, and you had then your deceleration on the 4 hour here. This was the deceleration on the 4 hour, you can see. So it was a very nice diesel. The only thing why I didn't took it was because at 2 out of 4, I want to see a pattern to have some more confirmation. It was followed by the pattern because the plan, because we had 2 out of 4. You could take your diesel. We had a normal bullish M for me personally, and you could take it. But if I have a 2 out of 4, I want to see just tapping the daily lows and then a pattern. That's why I didn't took it. I will see in my backtesting files what it can bring me. Um, because yeah, if you have diesel on that daily lows to the 2 out of 4, yeah, a lot of times it not play out, and I need to see how it goes with my backtesting files if I implement it again or not. Because my mentor said take the better chances of that, so take a better on the 2 out of 4 trades and daily lows. So yes, it could be a one of one, so 1.1% trade, so it's still running. So I was saying here, I was waiting for a pattern if we have a 2 out of 4 criteria, so that's why I didn't took it. And then yeah, AUD and ZD, the next one, why I didn't took it? It was 23 hours, so it was 23 o'clock. So the spreads were high, so I didn't place any trade. So if I go over it on a daily chart, what can you see on a daily chart? You can see here a first leg, second leg, third leg, then the fourth leg going back. So you had already a bearish W. Now what I also saw was this shoulder one, this head, and a shoulder two within that. So very nice to see with that correction. Potential flip completion we didn't had, I guess. So this was a potential fake out flag for going to the downside. So this is a very nice trade. So then on the weekly chart, what can you see? On a weekly, you can see that we had a very nice selling zone. You had here your support, sellers, support, sellers, support, sellers, sellers, sellers. So every time you want to come back or we went above that zone and we went back, we acted as a support or a resistance zone. Here we came from above, we acted as a support zone. Here we went from below, we acted as a resistance zone. When we went above, we acted as a support zone. Here, like resistance, here we went from below resistance, above support, below resistance, below resistance, below resistance. So it's a very clear supply and demand zone, and we had some nice moves on it. As you can see, move to the downside, move to the downside, move to the downside here, move to the downside. So we had some nice impulses, and I was seeing here this clear supply and demand zone that could potentially go to that zone because the daily TP is also sitting there. So that's why it was a very interesting thing. You can the only thing the difference is between the traders is that thing this is still bullish, this trend, but I saw it as here a high and this is a clear low because this is just a false break, and you can see this didn't broke yet clearly. This was just support. So for me it was still bullish, bearish, because yet here this is for me one leg actually, and with that supply and demand zone here and this bearish W here, it was very nice aligning here. For some people, would this be the low and this new high, and this is still bullish? This can be your fake out flag here, then go into the upside potential shoulder one, head shoulder two. So it could potentially play out still. So we are just in that selling zone here and here in that buying zone. So um, it depends on how you see it, of course, but for me it was a 3 out of 4. The trend was with a candle closed against us. This blue candle was against us. The FIP levels were with us, and the supply and demand zone, of course. So yeah. Um, so the daily was clear. Then we will go to the 4 hour. And on the 4 hour, what could you see? This was at the beginning of the week, the deceleration that you could take, but the spreads were already then too high. So of course we couldn't take that. But this was also around the spreads time, but Actually, I could set my limit when it was 10:50, 22:50 o'clock. Maybe I could take that limit and see if I potentially could be tapped in. Nobody knows, but I think I wouldn't be tapped in because of the spreads were higher. And yeah, this trade went to the downside immediately after 12 o'clock, so it was already running to the downside. So it was because of the spreads I couldn't take it, but potentially I could set my limit before that, and potentially I could be in. So this was the action I needed to do. So this was a potential mistrade. We don't know if we were in, but most likely we were not in it. So this was a diesel, went to the downside. Yeah, nice trade. Um, then see chip GPY. If I open the daily chart, this was a daily bullish M. So this was a very nice pattern also. What you can see is you had your big bullish M, you had here your first leg, second leg, third leg, fourth leg going back. So for me, it was a very big bullish M. And you can see the FIP levels are aligning with the smaller bullish M here. And you can see this as your previous structure that got hit. And then here your 78.60 aligning here with depth here. And then we went to the upside. So very nice trade. And we closed also nicely back around this IC zone low. So very nice. So we tapped two major zones, this buying zone and this resistance zone. And then we went to the upside. So it was a very clean trade. Um, I didn't took it. I will go over it immediately. So on the weekly, what you can see is you had here your bullish M. Actually, this is the new bullish M. First leg, second leg, third leg, fourth leg, FIP touched. Then we could go to for that weekly FIP completion minus 27. So what we had was that candle close was the only thing against us because this week closed really, yeah, in the middle of that candle, as you can see. So it closed more to the downside than to the upside. So for me, it was a candle close against us. The trend was with you, the FIP was with you from this low till this high. The FIP level was around here, as you can see. And then the supply and demand zone from this resistance that could become support here, which had a support week, was your supply and demand zone for me. Yeah, so 3 out of 4. So then the daily we had talked about, then the 4 hour, what you can see was shoulder one, head, shoulder two, potential diesel here that you could take, but it was a big pattern, so yeah, I didn't want to take diesel, so it was a potential diesel you could take uh, if you're willing to risk that because you had your smaller bullish M sitting here, this resistance here. So yeah, so then the shoulder one, head shoulder two, you could place your limit on that shoulder one, stop loss 15 pips below that, or under this low wicks here, then you could become this one, and then the daily TP was at a good level because if you set your stop loss a little bit lower from this wicks, 15 pips, and it was around here, then was your risk reward to the daily TP around 10%, and that's the thing I didn't want to do, so that's why I put my stop loss below this wicks here, 15 pips, and that's why the risk reward was better. So yeah, this was a trade I missed because I wanted to see a tap of the 61.80 in that shoulder one zone because I found it really close. It was not how I need to say that. That close was not too big for me, and it was, yeah, a potential bigger pullback. I expected to 61.80, but yeah, next time I need to just set my limit there. This was a conversation I had. Which conversation I also had? Yeah, I wanted to see a tap of the 61.80 to also my risky work was above 10% with the pip counting. I just needed to place it wider and look to the bigger support weeks. These were the conversation I had. So these were the two conversations that took me out. That, yeah, that I was talking me out of the trade, so that's why. Then Euro GBP. Um, yeah, I placed my limit 1 pip above shoulder one, but we didn't trigger it. If we would set 1.5 pip, then we would be in it. So this was a trade I set at my limit for, but I wasn't yet tapped in. So again, this was a 2 out of 4 trade, Euro GBP. This was actually the scale-in trade. As you can see, your potential shoulder one here, your head, shoulder two could be triggered. Um, because you had here your potential diesel that you could take, but yeah, this was a 2 out of 4, so we wanted to see a pattern. That's why I didn't took this diesel. And yeah, we just didn't tap it here. If I set it 1 pip, this is 1 pip and a half, and then we just tapped it, maybe we would be in, but I expect that we would be in because it is just tapping it a little bit above, and then we could take this trade to the upside. So if we take 1.5 pip, then we would be in it for around 0.85% if I took 1/3 out on the 4-hour TP. So this trade was a scale in, still running. Then Euro GBP, Euro Euro GPY, sorry. Again, this was again a scaling you could take. I missed the first one here, then the second one, so I couldn't take it. This was a bullish M. So you had here your first leg, second leg, third leg, fourth leg. Stop loss below the high low wicks. And you can see then it would be a trade that is still running to the upside. So this could be a very nice trade, still running. So this could be a very nice scaling trade, your GBP, your GPY. Uh, yeah. So this was my week. Missed trades were around 3.8%. If I just do it followed by my normal rules back in the days when I took 1/3 out on a 4-hour TP and fully take partials on a daily TP, if I would do it now with the 2.5% fully closed, then it would be more. Then it would be here 2.5, 2.5, 2.5, 2.5. So then it would be, yeah, around 10% already. So then it would be more. So this was my week. I hope you liked it. And yeah, see you next week. Bye.